Hello, traders. How are you doing? Broadcasting live from Mexico City. Here is Wednesday, November the 30th, 2016. I would like to thank you all for showing up for this webinars of yours, WoW Trades. As you already know, WoW stands for. Let's begin. A little bit about me, just quickly, because it's always good to know where the people that's in front of you talking about trading comes from. Well, again, my name is Alberto Alvarado. Here is me, myself, in the picture. I'm a self-made professional trader based in Mexico City. I have more than 10 years of experience trading the financial markets. I started in 2005 when my first live account, and it almost took me less than 1 month to lose it all. It was a $10,000 account at that time. After that, I decided to take seriously my self-learning, and I pushed really hard and started seeing the first results of my efforts at 2007, just to see again evaporate my account due to the 2008 financial crisis. After that, I had to decide whether to quit or continue, and I decided to continue developing my new approach on the markets. But what the 2008 crisis left me as an experience is that I noticed that what I thought it was my edge was not complete. So I decided to take it a shot and to add intuitional, emotional, creative elements to my trading, and it ended up working very well for me, and that is a part of what is my edge formed of. Besides that, I use traditional technical analysis, traditional fundamental analysis. The basics in technical analysis that I use is MACD, stochastics, RSI, and Bollinger Bands with the standard configuration of your charting package. It's really relevant. The secret is how you understand the information, not the parameters. So I'm a strong believer that a real trader. I don't believe in custom indicators in robots. That you need to buy robots because the idea is to become the least dependent on others in trading, and it's much better to learn how to adapt to the current circumstances using the same tools, or maybe switching the tools, but not being obsessed in optimizing every time. You can do that when you become really good at it. You can understand a way how you can configure a robot or a custom indicator, but at the beginning it's not necessary. I don't even use it after more than 10 years. I don't like to tweak the curve, etc. So uh, just to let you know that I use traditional technical analysis with the standard configurations. Okay, so let's begin. Well, before beginning, for the ones that haven't subscribed yet to my YouTube channel, remember to go there and subscribe. It's for free. You go to youtube.com and you click IIVV's Trading Room channel. This will show up, and then you click subscribe. Well, this day is going to be a very exotic day because we just have released that the OPEC actually made an agreement on cutting production of oil, the OPEC cartel. So that, of course, will have an influence in the worldwide economy and in the oil prices, in the European markets, in the industrialized countries, because as you know, apparently this will start pushing up the prices of oil and energy, including gas, etc. And this will hit just at winter in Europe, and I am sure that Europe is not strong enough to sustain a very a lot of volatility of that, or that maybe the energy prices surge and rally for too much, it would be very dangerous for the European and the worldwide economy. So we're going to check that out, how the markets reacted after the OPEC. That just happened like 30 minutes ago. So it's fresh information. Besides that, we're going to make a quick review in the geostrategic side on Crimea and Syria and how that is affecting the markets or how that could affect the markets in the future. And of course, the oil and euro quotes to see whether we can find something interesting. Well, this is what you're seeing here now. It's the Brent chart in the daily configuration, of course. I want to quickly review the history of how oil has been reacting. Uh, we have here the first reaction after the draft of agreement on Algiers in Algeria, and the market recognized it as a potential opportunity and started going up. But for some reason, the market lost interest here and making the price to get just to the prices just before the initial draft in Algiers. You can see here the price is 46.30, and it's not coincidence that yesterday we got to that price and immediately today we jumped from that price to above 50. But as you can see, at least now we haven't broken the top after the Algiers draft. We need to. There are a lot of geostrategic events that are going to shape the markets. I was commenting to other fellow traders that I wouldn't be feel comfortable trying to foresee what could happen with this because we have a lot of geostrategic and geopolitical things happening at the moment, piling up very very quickly overall in the Middle East. So it's a coin flip to try to. I mean, the bottom line is this: since and before being having Donald Trump elected in the United States, trading has become less fundamental biased, the fundamental dependent, and way more strategic and geopolitics dependent. So even though we have now this strong information, let me give you the exact data. I have it here in my mobile phone. Just give me a second. Apparently, the oil production was cut. Okay, a second. Well, apparently I cannot open my mobile phone. But the idea is that actually we are having this agreement, and that is why the market's reacting in this way. But what I expect from the next months, and maybe after the 100 days after Donald Trump being taking the presidency of the United States, I really expect that the markets will behave very erratically. Why? Because since now the markets are demonstrating the world that they are way more sensitive to geopolitical events, way more than fundamental ones. I wouldn't be surprised to see the market simply not obeying any kind of logic, or at least fundamental logic. One thing that catches my attention is that the market, at least now, hasn't made it above these levels, not even above this one. Well, we are just hitting this resistance. So unless in the next minutes or hours we don't have any speech from some important OPEC bureaucrat and boosting the markets, I really wouldn't call that this will continue moving up. What I expect is that from now on, for the next 3 months, and not only in the oil markets but in the forex markets, what we're going to see are big ranges of prices being tested erratically on and on. Why? Because what is happening in the Middle East? We're having a very delicate situation in Syria. For the ones that like to follow geopolitics, I know that When we go to the forums and we're trying to start our trading career, we barely make it to understand technical analysis, and then trying to mix it with fundamental is tough enough to start or to try to add some other elements to our trading. But believe me when I tell you that in this case, it's way less important the technical analysis than understand exactly what's happening in the Middle East. We're having a lot of countries starting to converge in Syria. That's a very delicate situation. I mean, this is something that you can see in the news, but we have had very delicate incidents in the latest 3 days there. We have a helicopter of the United States being threatened and pointed by a vessel of Iran. Fortunately, nothing happened, but the tensions there are increasing. Now, Turkey just decided to enter into the war, the, argumenting that they want to defeat the Syrian official regime, the one that Russia is defending. The United States is having a very tough time uh, fighting against what Russia is fighting for, that is, that Bashar al Assad stays in power. We just have Israel today bombarding apparently if I'm not wrong, a group of trucks because apparently there was an important leader of the Hezbollah. But you know what I mean with this. It's way too much people, way too much too many countries fighting at a very small place at one single time. It only would take a mistake to really ignite here something delicate. And the markets, I don't know if the markets are reflecting that fact in the prices already, because unfortunately the markets are like in a over optimistic sentiment after Donald Trump demonstrating that at least he's not as crazy as he wanted, as he tried very hard to make believe, and at least the markets are reading very optimistically that a lot of the important role players in the economic side, etc., are ex Wall Streeters or a lot of people that are very pro establishment. It was supposed that this was the president of the no establishment, but that's a lie. That has always been a lie. The difference is that power only changes hands and money only changes hands from one group to another group of privileges. So in this case, that was the case. So the markets mm, uh, really overreacted, over optimistically on some previous. I mean, Donald Trump is not even yet the president, and the markets are already over expecting a lot of things from this administration. So the risks are that the markets are very willing to try to ignore these kind of situations because they don't want their party to be over already. So if something happens, the adjustment could be very, very, very strong. Overall, in the euro dollar, we're going to analyze that, and of course across the board. But the thing is that now, in the 2008 crisis, it was a no-brainer. Everybody was buying dollars, and everybody was selling everything. But now things changed, and the patterns that the markets are following make me suspect that if the crisis in the Middle East increases, we could see the markets really don't knowing what to do. This is the example. This is the euro dollar, and here we have the bullish spike on euro when it was surprisingly Donald Trump taking the leadership. So by no means, not it doesn't matter if Donald Trump sold the idea that he was the anti-establishment guy. By no means it was an option to buy euros instead of dollars in this kind of uncertainty. So this spike put me thinking since that moment that the markets are maybe misunderstanding or really not knowing how to react on this because actually this is very new. The market has no previous experience on how to handle these kind of situations and really got confused. So besides that, the markets are over optimistic now. They are really wanting to believe that actually they can continue doing things the way they were doing them before Donald Trump. But the answer is no. The things are really changing in the world. The balances of power are changing, and of course, this is not going to be the exception. Besides, we have a geopolitical thing happening in Ukraine, in Crimea. Ukraine announced that in some 2 days, I believe, they were going to test missile launches that the idea is to violate the airspace of Crimea that Russia reclaims claims for itself now. So Russia just said Russia is accumulating some troops close to the border of Ukraine, and just said that in any case that Ukraine decides to test those missiles and violate the airspace of Russia, they will hit and launch a rocket aggression. So as you can see, this takes very we have a very small margin of error. And the thing that I just mentioned of Turkey, the delicate thing is that Turkey is part of the NATO. So it will be very confusing for the markets if for some reason the Turkey army engages fight or fire against Russia inside Syria. If the NATO could read that as an aggression of a NATO country, because it wouldn't be that way, it would be a NATO member army in a foreign country without the authorization of the OTAN, of the NATO, being fight by Russia. So it's a complete mess. The idea and why I'm telling you this, it's because don't let the markets fool you with the apparent optimistic mode. It's not such a thing now. The margin of error geopolitically in Ukraine, in Crimea, in the Middle East, thanks to Turkey, thanks to Israel bombarding and starting to taking part in this conflict in Syria, Turkey, Russia, United States, this anti-Russian propaganda everywhere. The most likely thing is that something at this point will get wrong. How wrong? I don't know. But it's almost a fact that something's going to happen. So, in any case that you decide to engage yourself in a trade, you need to understand the risks. Unfortunately, I was expecting this week to have at least one possible trade. But the truth is that the conditions are even worse than 1 week ago and even worse than 2 weeks ago. Not because the idea is not that you cannot, the markets are not delivering opportunities. Of course they are. But the thing is that for the ones that these webinars are intended, targeted, the newbie ones and the ones that are kind of in the middle stages, simply sit on your hands and wait. I mean, this is something. The only time window that I could say to somebody to open a trade would be no more than 2 or 3 hours. And I don't open trades for 1 or 3 hours in the webinars because it's not my interest to bombard you with this kind of trades that you cannot learn from them. But the idea is be very careful. without I don't want to panic people because that's not the idea of this information. But the thing is that you are not seeing this information in the financial mass media. You know this thing that I've been talking about, the mass media, etc., in other webinars. But the thing is, this is something that is happening now. Just imagine a consequence that for some reason Ukraine really makes exercises and then Russia hits back with a missile to Ukraine. Could you imagine the consequences? I mean, the consequences are not only civilians, but how the escalation that this could take. This is the real danger of all this. Now imagine the Middle East increasing the risks of a more severe war that could spread along the Middle East. Now with this decision of cutting the oil production, actually we could have a huge jump in the oil prices in the Brent, let's say from 50 to I don't know, 50 maybe to 80 in a week, and then pushing back again in the next week. So it will become so unstable as the unstable situation that we're living worldwide. We're starting to have verbal confrontation between Pakistan and India because an incident in Kashmir. So the things are heating up, and this is a real thing. And in my opinion, the least thing that I am worried about now is trading, is opening or not any kind of trades. The consequences of the things that we're seeing are important and are way more important than trading. So at least the thing that you can do to have the peace of mind is not risking money unless we see something establishing and coming back to a decent level of certainty. And I'm going to give you a date. That won't happen before January 20th, when Donald Trump will formally take as a president of the United States. And I'm not saying that this will happen, but I'm sure that before that date, we won't have any kind of certainty. So I strongly suggest you just to watch the markets this next 2 months. Of course, we will reviewing how the market behaves, but with this kind of things, it would be hugely responsible for me and my side to try to give you a I don't know, an insight, because I don't even have an insight now. I really don't know what's going to happen. At least in the 2008 crisis, everybody knew that in any case that the capitalism collapsed, at least the best bet was to keep dollars. But now, it's not the same thing. We really have no idea what's next. I was commenting, this is the euro dollar daily chart. I was commenting to other fellow traders that I was expecting here the price to rebound and maybe trying to look for a potential shorting opportunity at levels of 108, more or less. But the risks were that since we are having very volatile situations now, at least in the euro, this will be reflected to the downside. Buying euros for me, it was not even acceptable. But I was expecting maybe the market to get closer to these levels so we can manage our risks considering maybe a stop loss at 1.1 or translating to binary.com language to open a no touch binary option at that level. But the things that the markets look at this. This is the daily candle. It's already moving down. So the risks are that this could go in and snap to the 104. And this is being boosted because of the reasons that I'm telling you, the US strategic. But the other one is, okay, actually the OPEC made it to have the oil production cut. This will very, very badly hit Europe. That is why the most likely thing is that this will start selling off. But the problem is not that. The problem is that this movement starting at the support, but the real risk is that now the acceptable stop loss reference level is at 113. So it's a huge risk. What I was expecting is that a volatility reduced more or less here at the 108, and then confirm in the smaller time frames a pattern to the downside, and then maybe try to short it with a very 200, 150 stop loss level. But now it's simply unacceptable because of the potential moves that we could happen, that we could have. And adding up everything that I just explained, we will find a very tough time to find decent risk trades for the next 2 months at least. Okay. So this is the euro. Just look what the reaction was in the euro just after receiving the confirmation of the OPEC cutting production. Okay. This is the Brent chart. That it's above 50, not yet close to the stop. What we need to see what happens in the next hours, in the next from now to Friday. And the most oversold currency in the world because of Brexit just stopped selling off after having this huge 600 pip drop. But in any case, I don't think that just because it's just very oversold and that maybe it's just the movement to downside is done, that doesn't mean that this necessarily will soar in the next week. Because with this, of course, having the oil prices increased, will hit everybody. Actually, my opinion is that if the markets, the prices of oil go above 70, it's a worldwide recession warranted, in my opinion. So, of course, the pound and the UK economy will be hit. Of course, not as badly as Europe. Overall, because we just had a huge sell-off since Brexit in the pound. Now it's the chance, and that's the time for the euro to really feel the battering and the hits of not having the sufficient economic performance, but we need to see what happens. Okay, just this is the daily chart of the cable. Now we're just retesting this resistance, but you can't compare this with the euro chart that I just showed you. Immediately after having this news on oil, it's not coincidence that the euro started selling off. Why? Because the most badly participant with that will be Europe. Why? Because besides, Russia can even restrict the selling of the natural gas to Europe because of these increasing intentions. And besides that, having these prices increasing, the potential very bad consequences for Europe are huge. And you could say, oh, then let's go short euro. It's not that easy because we have these geostrategic events happening. If we have only the oil prices going up, maybe I could even think shorting now. But since we're having a lot of things happening, and again, it's a huge deal having this production cut by the OPEC. But the real deal is how far, how high the prices could go. And until we have that happening, we cannot know something in advance. And maybe we could then decide to short the euro now. But since now the least of the problems, in my opinion, are the oil prices. It's something cooking in the Middle East that it's very delicate. So at some point, I believe that the markets will start taking that seriously. And then when this huge turbulence and erratic movements will start happening. Because nobody is really sure how to react on this. Because in the Cold War, there was a fear of World War III, but the communist side of the world had no participation in the capitalism. So even though there was a huge risk, the economic forces were only relevant in the West. But now the worldwide economy is integrated. So we really have no idea how in an economy these kind of conflicts look like in the economy and in the markets. So that is why that huge spike at the beginning when Donald Trump was elected, buying dollars and then selling off, I expect that to continue happening because at some moment people would think sell dollars and maybe next week buy dollars and you will have huge swings of prices. And that is very, very delicate because if you are a beginner, it increases the chances of failing hugely. So make ourselves a favor. Let's have a commitment with our own money, not risking it irrelevantly. Let's wait. At least one of the certain things is okay. Let's see what Donald Trump starts doing at the first days of his presidency. Let's see if all the conflicts that are already in progress in the world, if actually he could make something to calm down the things. I don't think so, but we need to wait and see. And then, but at least as the things are now, I'm not even by by any means I have any kind of live money in the markets now. It's simply for me, it's unjustifiable. Okay, so I'm sharing you this because I believe it's important that you realize that the risks are real and are getting bigger. And when that happens, you take your money out of your table and you wait. What you wait to things to calm down, nothing more. How much that could take, who cares? Just wait for the things to calm down. Of course, I will keep you updated here and in my personal YouTube channel. So I'm trying to be upfront and honest with you. Be careful if you decide to go for a trade because the markets will start behaving crazy in the next weeks. The prices of gold, the chart that you are seeing now, in my opinion, gold stopped being a reference of a real safe haven since 2008 because of the manipulation of the prices. What I mean with this, I have commented this in other webinars. The prices of uh, of gold are in a bubble. Why? Because the most part of the gold transactions in the world are speculative. They are never delivered, physically delivered. So we have a a price that is not reflecting the real offer and demand of gold. It's reflecting everything but that. If at some moment all the people that holds, all the things that move, all the instruments that move the prices of gold in the world, and one moment everybody saying, okay, I want my gold delivered, there won't be enough gold in the world to cover all the demand. So this gives you an idea how distorted the prices are. So not even watching gold now, it's a reference. That is why I'm telling you, not even gold is a reference in these such situations. So what's next? The markets will get crazy. They will feel, where do we run? There's no place to run now. It's purely a gamble because me myself, I have no idea what what happened after the volatility that I am expecting to happen in the next days or even hours. Okay. So again, not just because you see the prices of, let's say, gold move up, means that it's a safe haven. No, the patterns of the gold prices, of the movement of the gold prices, are very questionable, and they stop being a reference for quite a long time already. I would like to thank everybody for showing up for the webinar. I know that maybe this webinar was not as useful as to decide on trading on a trade, but trust me when I tell you that it's way better that you regret not being in a trade because you missed it than you regret being in a trade already because it's losing. In my opinion, I am seeing things that I have never seen during more than 11 years, and consider that I lived through the 2008 crisis. So when I'm telling you this, I know what I am talking about. So since this is completely new, I apply that to my experience. Trading the financial markets now, I'd rather regret not being in a trade than being in the wrong side. But that because that's not the problem. The problem is not being in the right side. That's not a problem at all. But the problem is that this will get so erratic that you will start even generating distrust on your own skills. So why to do that? Just we need to wait. At least I would expect to wait at least 2 more days to see what happens after all this mess in Syria and Ukraine. At least to see if Ukraine really makes this missile testing. After that, if this doesn't escalate, maybe, but not before. It could get out of hand really quickly. This, and you could be in the right side, and just a snap, it could go against you. And what you will do, you will wait. It's a good idea to wait or to close it. Nobody knows. Now the things are in this channel, in this point. So wait, sit in your hands, enjoy. Well, if this is enjoyable at all, I don't think so. But something interesting new happens, I will keep you updated in my YouTube channel. If not, remember that I expect you next week at the same time in the same place. Remember to trade safe, be safe, and bye bye.